Alright, boys. Now, unfortunately, there's not too much change since yesterday. We had a little rally in the dollar yen. That was nice because we've been looking for this dollar yen to push higher. We actually want dollar yen to break above 105. Pretty keen to get long a few crosses. Aussie yen, Euro yen, pound yen. Everything here is at quite nice levels. New Zealand yen after the RBNZ, and dollar yen just in general, right? If we're going to say 110 in the next 3 months, I want to get a bit of that. And at the moment, I mean, people are quite comfortable, being a little cautious on this pair. It's not gaining headlines. It didn't gain headlines even on the rally, but it's grinding. It's grinding, and it's not at 120 anymore. And the trade makes sense fundamentally. The raising of rates is going to hurt. It's going to help the differential here. The yields rise. Probably they're going to raise and actually remain hawkish. Alright, so this is what happens in December. So you get the follow through rally in dollar yen more than other pairs just because it's happening, right? Once it starts to happen, we break above 105. It's pretty clear sailing all the way to 110. Not much resistance up there. So it's a trade I really like. It's a trade I want to get involved in, and it's happening without much fanfare. The euro might go to 105, but between 105 and parity here, I mean, we require some, I don't know, just euro disintegration type news or hard Brexit negotiations. That doesn't necessarily help dollar yen rally either, because risk will come off, stocks will fall, dollar yen will come down. But at the moment, stocks are fantastically supported, mostly by the DAX. DAX is having a nice little rallies here on the back of the ECB extending QE. And that's helping sentiment over in the US session. There's no negative story at the moment. There's no, apart from yields rising, and they're doing it gently. There's no reason to be short equities, and probably we are going higher. So that fits with the dollar yen trade as well. Yeah, so everything here is lining up with dollar yen quite nicely. In terms of potential catalysts for pullbacks, I mean, look, if yields get out of control, then obviously we'll have that taper tantrum type scaring coming back in that you saw from the ECB. But it looks like ECB is going to go the road of initially no taper and then taper later. So I don't think that's going to be a major cause of concern. BOJ expectations will be wound back so much that's hard for the BOJ to disappoint. Another crucial factor in why dollar yen can continue to rally. If there's no expectation, if anything, the BOJ does nothing. If anything, BOJ does something. You got some nice little rally there. So that's the way I'm positioning in terms of going forward. It is a little risky. Dollar's a little extended, but I think US dollar index is going to test that 100 level, and gravity is weighing on the euro. Any sort of rally should be sold into. So let's say we get a nice little relief rally to 109.30, 109.40. Wouldn't mind selling into that as well. But mainly dollar yen. Mainly dollar yen long. Aussies attempting to have a rally again. Harder to sell it this time, boys. Harder to sell it. Yesterday they sold it. Today, the buyers have got back control again. Basically, the strongest pair in the strongest currency in the market is Aussie at the moment, and you're seeing that Aussie CAD's at multi-year highs. Aussie Kiwi's grinding. One of the trades that we have open at the moment is Aussie Kiwi, and you can see how it's nicely developing here. Pulled back, the buyers came back. Now we are extending. There's two other trades I got is the pound Swiss and the euro Swiss. Euro Swiss, I'm just playing the range. So euro Swiss is just 108 to 109.30 range. In terms of where you put your stop here, 107.50 has been. I'm talking to clients about 107.50. Yeah. So what's hey chat? What's going on? What are you guys talking about? S&P, yeah, S&P and Dow. Yeah, it looks like they're going higher. I don't think there's any reason to be short just at the moment. We'll see. We'll see. Post the first Fed rate hike, maybe January, you might see some selling. Last year we got some pretty heavy selling in January. People say, oh, it wasn't because of the Fed hike. Could have been. Could definitely be. Yeah, look, because Aussie's getting a little stretched across the board, if there is weak CPI, then yeah, it's a definite risk. So CPI is tomorrow. We'll look at some previews of the CPI later in the data previews from the banks. 0.4% forecast. The risk are to the downside, considering New Zealand CPI came in pretty weak, but I think there's even a reaction to 0.3. I don't think that would be weak enough to open the door fully to to get the RBA to go from neutral to dovish again. I mean, obviously they'll be concerned about it, but if it comes in hot, then it's just wow, what we wow. Pick your pair to buy the Aussie against. So I like Aussie yen in that scenario. Aussie yen is currently testing this 80 level. Failed the first time. Probably going to break it this time, especially if dollar yen breaks 105. If we can get to that leads open to 83 to 85, makes sense. If dollar yen's going to 110, that we get back up there over the coming months. Aussie doesn't have to break to the top side, but it might. I don't know. Looks pretty. Every time it gets above 77, it's a bit. US dollar's got to be strong going into the NFP, right? Sorry, into the December rate hike. So it's going to be hard for it to keep pushing. So yeah, that's my little rant today. Not much has changed from yesterday. Just trades are going in the direction that we hope for. So let's have a look at some of the trade ideas that have been posted here. Short dollar CAD, I love it. I think it's got some good risk reward. Stop 104.10 CP. Yeah, I mean, as long as your TP's double it, Jay, it's good. And holding it, right? That's the hard thing with CAD. It's a bit cheeky down there, isn't it? Every time it falls, it's buyers come back. Yeah, that leads into being long CAD yen. Another good trade. Dollar yen short. Ahmed, what are we doing? Why, sir? Why, sir? Trade description, good luck. Yeah, good luck. Ahmed, good luck, mate. And short the Kiwi, yeah. I mean, short the Kiwi makes more sense than the other trade. I hope this is more about the RBNZ than anything else. Just underperformance, maybe some US dollar strength. Look, I think it's going to struggle to get past 70 before the cut, and even after the cut, we're probably looking to buy, right? Unless they're ultra bearish. Dovish, I mean, the RBNZ. And they're just terrible. The RBNZ, Wheeler, is just terrible at talking down the Kiwis, so you can't rely on him. I don't want to buy the yen, Zars. I like the short and Kiwi part, but I just don't want to buy the yen. Aussie CAD long. Oh, that's keen, mate. That's keen. We are at, multi-year highs, so dollar CAD long. Yeah. Not much cup of tea. Not my cup of tea. I don't know if he's got the full pitch in the last 7 hours. Yeah, but not too bad. Not too bad trades. So 2-year highs in Aussie CAD. So I said we're going to have a little look at CPI. Let's have a look at that now. Blackadder, you can probably watch it at the YouTube if you really can't see it there, mate. If you can't work it out. Alright, what does our boys over Credit Suisse have to say? Q3 inflation risks have skewed to the downside. Alright. So it's just based upon, there's a monthly piece of data that comes out. Inflation Westpac report. God. This is what happens when analysts have got too much time on their hand. Yeah, nah. They're struggling here, I think, to get that. Although, I believe it's Goldman has come out thinking that the RBA will cut one more time. There will be a slowdown. We'll see. We'll see. Hopefully we got some EMR here. We haven't read EMR. This is the FXWW room, guys. You can access it for $50 a month. Forex Live people run it. Just bank traders hanging out, talking shop. So some of you guys are talking about the Aussie CAD trade. I do believe there was a trade of the week put out earlier. Let's have a little looky. Trade of the week, trade of the week, trade of the week, trade of the week. Aussie CAD looks stretched. Looney's cheap versus oil prices, correct. Should benefit from less US election risk, probably. Medium-term outlook for non-oil exports is positive. Yeah, people are pretty long the Aussie at the moment. I mean, there's no trigger there, right? There's no trigger here for the reversal apart from it's stretched. So that's a little bit of a dangerous trade. Let's wait for some sort of negative story, maybe for the Aussie, before we get short the Aussie CAD. No reason to be first into a trade that's trending so strongly. If the market's taught me anything, it's that. Sit on the hands when you're trying to sell something high. Just because it's high. Have been higher. Have been higher. So, I mean, it's not that far away. Gets a bit more compelling, right, if we're really stretched. It's funny why CAD is so underperforming. You saw that little market where it crazy this morning? This is Market misinterpreted some comments, but the damage was done, right? So Polez was speaking, so something along the lines of best to wait and see for the next 18 months, and then he's like, oh, no, I was talking not about the interest rates. I was talking about the GDP gap. What? Yeah, okay, maybe. Too late. We're selling. Buying Aussie, selling dollar CAD. See how we go. I mean, with oil so high, it doesn't really make too much sense here. I mean, no one really believes that BXC is going to cut again, right? Surely. They're just talking the talk. And we're talking about that trend the other night. Looks like the trend's holding. Trend. So, I mean, buying maybe a lot lower, 131-ish. Just like the Aussie, it just hasn't been busted for a while. There's been no trendiness in the CAD for the last 3 or 4 months. I mean, it can trend, but there's just been no trendiness for a while. Okay, we're reading this report just to see the latest chances of the RBNZ cut. Alright, so there's an 83% chance of a 25% basis cut. Market is pricing in 1.68 for a year ahead, so it's less than a, there's less than a 50% chance actually they cut 2 times in the next 12 months. There's only like a 25% chance. Everyone's talking as if November's done for sure. And these guys talk the reverse, so New Zealand Aussie rather than Aussie Kiwi, but we're targeting 110, which is basically 90, right? Oh, they're not too bearish on it. Yeah, I want to see the price action on the Kiwi after they cut rates. I suspect they're going to be a dip and then a rally. There's a really big job. They have to talk up the chance of a second cut in the next 6 months. All right, another trade that we got going on obviously is a short dollar Mexican. Now we don't have to check that too much each day. All we have to see is if there's been anything which has stopped the current momentum Clinton has, and there hasn't. So there's no reason not to keep on holding these trades. They're starting to make some significant money, so this is some good stuff here. It will pay for a couple of losing trades at some point. And it's swap positive, which is another great thing, right, when you're trading. Some EMRs are really not swap positive. The issue with the pound is that negative headlines aren't making the market go down at the moment, so that's a sign of fatigue. So if you're looking for scenarios in which the pound rallies, it's a scenario that we have sort of at the moment developing. So consolidation, negative stories not impacting the pound. All you need now is just a catalyst to get the rally going. Easily can get back towards that 125. And that doesn't even change the downtrend, right? Just a short squeeze. Yeah, that's a good point there, FX Ram. If the US is hiking, there is no reason for the dollar CAD. I mean, if the dollar CAD's rising as well, that helps. So if we're at 135 and it's a line ball decision, then they're probably not going to cut rates or whatever they plan to do to additional ease at these stage, right? You don't usually do QE unless you get down to 0. interest rates anyway. This is a big call, isn't it, by Citibank? Aussie dollar is going to range trade between 74.90 and 75.55. Huge call. Huge call. I mean, that's the safest call I've ever seen. It's ridiculous. No one can see the next move in the Aussie. I can't either, man. I'm not going to even hazard a guess. I can understand a scenario where we go to 80. I can understand a scenario where we go to 73. Maybe we just continue sideways trading for another 3 or 4 months. Okay, so we are looking for the 200-day moving average. I believe that's 69.60 at the moment. We'll check that later. 69.94. Oh, it's grinding higher. Australian data is important. US GDP, meh, not so. Japanese CPI, not so. Wow. They've got a 6 to 12 month dollar yen outlook at 97. I mean, BOJ's limited impacts, right? My take on that is that expectations are going to be lowered and that there isn't going to be follow through yen buying, especially if stocks remain strong. I don't know why they think this is going down to 97. Wow. Well, remember this, right? Remember this, boys, if they get it right. Oh, they're ultra bearish on this. Ultra bearish. And they're pretty bullish on the euro too. These guys are not dollar bulls at all. No, they're not, nothing too crazy, but still pretty interesting that they're so medium term, long term bearish. Alright, might do the last one, boys. Just a quick update today. I'll do a bigger one tomorrow, showing the impacts of what happens with the Aussie. Hopefully it's just as expected, so we can really get into the buying of the Aussie. Anything a little bit weak makes it a little harder. It's harder for our Aussie Kiwi trade. But at the moment, you know, I'm still happy to be long. Burden of the proof is on the bears at the moment, not the bulls. Alright, this is BNP. We believe the market's on the verge of a melt up. So melt up is sort of like where the shorts just chuck in the towel in global equities, especially US, into new tactical tops. US equities are trading in a final wave 5 bull cycle. Ugh, okay. This supports a 10 to 15% potential equity upside and additional room for a hunt for yield before this cycle ends. Hunt for yield will help the Aussie and the Kiwi, remember? Alright, so they're targeting 2,400 on the SPY. Next 6 months. They're buying everything. Buying everything. But they're selling gold. And this is their technical view, so that's interesting. That's interesting. I'm always amazed with the stock market how it continually grinds higher, right? It's just, I made a lot of money just buying stocks when there's no news. It's surely it can't be this easy. I want to see a bear market. I've never been in a bear market. I've seen a crash, 2008. I've never really seen a multi-year bear market. I wonder what it feels like stock-wise. I mean, obviously it'd just be like when we've got downtrends in currencies, but we never felt it. I've never seen the bear market in stocks. We're still just spring chickens, only 10 years in. Some of those old vets on Wall Street must have been like, you haven't seen it, sonny. Haven't seen it. But it seems like the central banks are so proactive and so over the top active. That's just hard to have even more than a 10% drop without some emergency stimulus coming through. We'll see. Obviously, sometime we're going to have the music will end in terms of the global QE party. Alright, guys, I'll be back tomorrow 9 GMT. If you want me to look at a specific pair, send me a PM. We'll look into it. At the moment, we're just buying dollar yen, mildly bullish Aussie. We're looking forward to the Aussie CPI. And yeah, keeping an eye on the pound there for the potential short squeeze. Trade safe, yeah?